and our eminent speaker will be giving us insight detail on this. We request everyone to follow certain do's and don'ts, as all participants are requested to mute their videos and audios. Questions to the speaker to be typed in the chat box and will be answered at the end of the session. Further questions, if any, will be answered offline. We request all DCICI members to type or rename their login as membership number followed by their full name. Doha chapter members are entitled for structure 2 hours CPE. Without taking much time, I would like to call upon our chapter youngest chairperson, who is multi-talented, always engaged in sharing knowledge through seminars, doing social service. With great round of applause, we invite C. Ankit Agarwal to take the proceeding further.
Thank you so much, Rakesh. Thank you, everyone. Good evening, everyone. Before proceeding further for today's CP event, I would like to have a couple of announcements. The first announcement is that Annual Cricket Fiesta 2022 of Doha chapter of ICAI, following all the COVID-19 protocol, is back after the 2 years, and you will be receiving the further updates in the upcoming week from our sports committee. We won't be able to do it in a grand scale, seeing the challenges due to the COVID and upcoming FIFA tournament, but we promise it will be a memorable one. The second important announcement is that our whole executive committee team is working towards the upcoming 8th International Conference of Doha chapter of ICAI on the theme Digital, Evolve, Empower and Enhance on 27 and 28 of October 2022 at Marsa Malaza Kempinski, Pearl, Qatar. The detail regarding the registrations and the speakers will be circulated in the upcoming days. We are planning an entertainment show also this time in the conference. So stay tuned and follow us on all the social medias for the upcoming updates. The third important announcement is that we are working towards the revamping of Doha chapter of ICAI website with more enhanced features like the job portal, members discount cards, Android, Apple apps, and many more important notifications. So stay tuned for more updates on the website also. Now it's time to welcome you all for another enriching and insightful technical CPE seminar on blockchain and emerging opportunities around it. In a layman term, I would say blockchain is a system of recording information in a way that makes it difficult or impossible to change, hack, or cheat the system. A blockchain is essentially a digital ledger of transaction that is duplicated and distributed across the entire network of computer systems on the blockchain. Each block in the chain contains a number of transactions, and every time a new transactions occur on the blockchain, a record of that transaction is added to the every participant's ledger. That's a bit of a small definition of a blockchain from a layman term. To give you more insightful knowledge about the topic, we have a very special guest today, C.A. Narasimha Elangovan, and a renowned speaker on the blockchain, Shri Aswar Gupta. It's my pleasure to introduce the special guest for the evening, C.A. Narasimha Elangovan. C.A. Narasimha, a futuristic, a GRC professional keynote speaker. His area of practice include data analytics, risk-based audit, privacy impact assessment, internal audit, information system assurance, internal financial control, and SOX compliance and SOC audits. In the past few years, he has also been advising in the emerging areas of technology such as AI, blockchain, cloud computing, cybersecurity, and big data. He has regularly spoken on this domain in the national and international forums. He has assisted a wide varieties of entities from startup to the large corporate in the fields of BFSI, telecom, retail, fintech startup, airline, e-commerce, government of foreign countries, and many, many more cross-organizational functional organization. He is the faculty for Disha, Shisha, and the courses on the blockchain technology. He has authored more than 4 books for ICAI, KSC, AA, etc. on technology. He is a regular speaker on technology at a various national and international conference of ICAI, ISCA, CII, FICCI, etc. He has often addressed the ISCA International Conference at Asia, CCS, Europe, Africa, North America, and was often among the top rated and the youngest speaker. He has spoken at the international conference as Dubai, Malaysia, Bangkok, Saudi Arabia, Geneva, Doha, Nairobi, Singapore, Nigerian, Bahrain, Kuwait, California. Oh my God, it's a long list to go. He has been identified as one of the top 10 influential consulting leaders 2022, an annual recognition for the torch bearers in the consulting sphere by the CEO Insights magazine. Please do welcome CA Nashima Logavin with a big round of virtual applause. So, virtual stage is yours.
Thank you so much. Very nice to meet all of you, and a very, very good evening. I know it's about 6:30 there in Qatar, and really appreciate the fact that all of you are on to this system, glued in, and sort of and discussing this. If you ask me, what is one of the biggest change which has happened in the last 3 to 5 odd years, right? Of course, the change is going on. But the last few years, if you ask me what is that one major change which has taken place, I think it is called as democratization. And what is the meaning of a democratization? Democratization in a layman's perspective is trying or letting the control away from a monarchy-based system to a much more decentralized and self-regulated basis. A simplest example, let us just pick it up, right? During the pandemic, when things were closed, when all of us had some challenges, I'm sure one of the things which all of us tried was going to YouTube and trying to see how best I can make my own favorite dish. It could be a biryani, it could be a Arabic cuisine or a North Indian cuisine, or for that matter, an African cuisine or whatever. You wanted to try something new. And today's next gen set of entrepreneurs, members, kids, youngsters, the millennials are all following this principle that they would like to try things on their own and experiment it. Which means we are now heading into an era where no longer a centralized control is going to be existing, and therefore a decentralized setup is what is the need of the hour. And when you have a decentralized setup, of course, where where we are going, this is where from a centralized we came into a decentralized, and from a decentralized we are going to a democratized, where we let people choose what they want and how they want to do. And one such technology which brought that massive shift is the concept of blockchain. In a layman's language, if you have to explain blockchain, it is a technology. It's a technology basis which any transaction which occurs through the technology has some set of people who have authenticated it. Thereby, nobody can dispute. Now, when nobody can dispute, can I say the trust factor is high with it? The answer is yes. The moment the trust factor is high, then what happens? The need for you doing audit or additional checks is getting reduced. Let's take a simple example, right? You go to a market and you purchase a product, and the trader says, sir, this is the original apple which came from Kashmir, or original product which came from so and so, right? Now you have a doubt in your own minds, right? You're going to, of course, apple is too small a commodity, you don't really mind, right? But what happens if I have to look from a slightly different angle? I'm talking about a precious jewel, a diamond ring, and you say that this is coming from so and so place, and therefore you want to be very, very cautious about it. You feel very happy. But can you prove that the entire trail from the place where it originated till the place you got it? No. You can say, no, sir, we have certified all of those. All those stories are great. But can you prove it? The answer is no. And that is what blockchain as a technology aims to achieve. It brings in that element of trust into any sort of a transaction. And from an accountant perspective, the simplest way you should probably think of blockchain is it is a triple ledger system. How does it work? Forget about any of these concepts. Let's put it in a very simple transaction. We build one system or a software where I pass a debit, automatically the corresponding credit will go into your books. So I have a debit in my books, credit in your books, and a centralized system which keeps track of it. You might say, sir, I'm using ABC accounting software, SAP, Tally, ERP. It is not integrated. You build an app, let us. I'm just giving one level, right? Now, what are we trying to achieve? That we are trying to achieve a situation of there is no need for you and me to reconcile, because what is there with you is what is there with me. No longer necessary for reconciliation. And that is what this technology aims to achieve, right? And the use cases of this are huge. A simple example, if this blockchain comes into the setup of a securities market or a banking, number of people who are there today is massive. Today, number of people are massive in this entire, banking setup. A simple example, you are giving money. Can we please mute all of them, if that is okay? Thank you. Let's take a simple setup, right? We are giving money or we are giving in funds to make an investment. Typical Islamic banking setup where the deposits are there, you are getting some share of profit, right? There is a bank who's actually, or a regulator or an entity which is actually eating up a portion of this funds because they are managing this entire setup. Now, can I remove the bank completely and operate? It may not be possible from a regulatory perspective, but imagine for instance, I have given a loan, right? 10 people together have given a loan to a person, 1,000 or 10,000, or let's say, basic denomination of 10,000 local currency, right? All these 10,000 accumulated, 10 people have given close to about 100,000 rupees or local currency. That person pays the interest at the rate of 8%, 9%, 10%. In a click of a button, all this amount gets split and it comes into an account. That's possible through a blockchain technology. Is it possible through any other technology also? Yes, it is possible. But the assurance which you get in a blockchain is much higher. Why? It is immutable. That means a transaction, once it has occurred, there is no way that you can say it is not occurred or it is irreversible. At the same time, there is also an interesting perspective which you should keep in mind, that the trail of this entire activities is going to be stored forever. Of course, it has some interesting challenges. How long can I retain the data and the data sets, etc., which we'll address that a little later. But yes, that is the perspective. I'll give another very interesting, simple use case which you could probably pick up insights, right? Now, most of us use this car apps or an Amazon or the local SOAK apps, where we are either purchasing, selling, or booking a cab, taxi, etc. Now, how does this work? I book a taxi. The money moves from my account to the Uber or Kareem or whoever it is, their wallet. And from there, after 3 days, 10 days, 20 days, whatever, the driver gets the settlement. Now, there is a company based in India, and of course, the rest of the globe as well, there are technologies which is working, which is predominantly put this entire thing into a blockchain setup. And how does it happen? The moment a transaction gets routed through this, right? The moment I hit an approval and my ride is completed and the driver accepts or I accept, one of us, right? We have to get the send button and with the geolocation. Immediately the funds get reduced from my account and within a few seconds it is credited to that person's account or that person's wallet. And that is possible today, right? And thanks to technologies which are additional technology which is also sort of helping them out, right? So this is where it is actually bringing in a lot of use cases. That means a typical blockchain setup is more handy to solve problems where you have chaos, confusion, multiple players in the system, multiple intermediaries. All these players will slowly start moving in and you can bring in more digitization. But today, one of the largest use of blockchain which has been known, which all of us have been reading, some of us have invested or used, is the cryptocurrency. Do not think that cryptocurrency is the only word or the only domain of the entire blockchain. Please understand, blockchain is like internet. Blockchain is like internet. Can you send only emails using internet? The answer is no, you can do much more. So one of the use cases of blockchain is cryptocurrency. There are much more, right? But what are those newer things which are actually taking place? I hope the fundamental concepts, all of you have got clarity. Of course, Aishwarya has also joined and he will probably speak a little more in terms of how do you go into the depth of it? What are the new things which is coming up in this blockchain setup, right? So this is the larger perspective of blockchain. Now, what it brought in, as I said, is the concept of democratization. When this democratization comes in a little further, right? It is removing the intermediaries and therefore placing trust on others or trust on the general public or the general regulated setup rather than one centralized setup. Right? And that is where you are actually heading into. And that's one of the biggest advantage. Right? Now, typically this blockchain in this modern world, and at least in the last probably 6 to 18 months, what are the changes or the new things which have come? The first thing which has come up is a concept called as DeFi. DEFI, decentralized finance. It's just an opposite of CeFi, centralized finance, right? A simple example could be all your financial transactions operate in a single integrated player like a bank. Remove the bank in the system. Remove the bank in the system. Remove the securities market intermediary in the system. I am buying a share, you are selling a share. Can the transaction get settled directly with or without the stock exchange? Or maybe just retain the stock exchange, remove all other intermediaries. And that is the decentralized setup which we are talking about. Right? The second very, very interesting thing which actually made a lot of noise is a concept called NFT, non-fungible tokens. All these things are related to blockchain. But what is this NFT? In a nutshell, if I have to say, first let's understand the word fungible. Now I have 100 rupees or $100 into my account. Right? I am withdrawing it from a bank through an ATM or through a machine or through a cashier over the counter, etc. Now I use this for some purpose, and tomorrow again I deposit this $100 or 100 rupees or 100 Qatar riyals into the bank account. The amount or the currency which I withdrew and the currency which I put back, is it the same? The answer is no. They are completely different. Why? The currency number is different, this thing. But the value-wise, it is the same. The answer is yes. So fungibility is a scenario where everything is equally and replaceable. And non-fungibility is it is not replaceable, which means it is unique. A simple example, you assuming way back, go back into probably 10-15 years back, if you got a autograph from Shah Rukh Khan or Amitabh Bachchan, that was one of the most cherished memory. And today you require a selfie. Only then our Instagram followers will start, liking it or appreciate it, right? Or for the matter, Facebook or LinkedIn. So assuming you got an autograph and tomorrow you want to prove that, hey, this autograph is unique, authentic, and nobody can sort of trace it or duplicate it, I can always do something weird and try to duplicate it. How do I assess the originality? And that is where this concept of NFT came into picture, where let us simply put the original art piece, song, literature, work, photograph, anything is put inside one box. Let's simply call it as a box, right? Basically, the hashed value of that is getting generated. That hashed value represents that product or that whatever artistic, whatever it is. Now, whoever owns that is the owner of that original asset. Digitally, you have to. And therefore, this becomes a product or a commodity which is now traded. Amitabh Bachchan had his NFTs, which he had sort of sold it online and made a huge sum of money. Right? And this is also brought in an interesting perspective. Assuming Michael Jackson's song or, one of the largest Britney Spears composition of music, any of these things are made and pushed into an NFT, only he or she will have access to that. And you are able to prove that you are the sole owner of that. Look from your angle, you're able to prove authenticity. Look from the angle of the owner of the asset. He knows where his asset is going, and he knows that only this person or that person has the original asset. He has an entire trail. Not just that. Imagine this gentleman sold it to somebody else. The owner of the asset can get royalty even on that subsequent sales, depending on how you have sort of configured. So this way you are bringing in more and more things into the setup on a digital world, right? So that's NFT, non-fungible tokens, which is spoke, right? And today, literally most of the artists, etc., are there bringing their digital works into this setup. The third, which is a very, very interesting thing, I'll probably call it as CBDC, Central Bank Digital Currency. In a layman's language, you can presume it as a cryptocurrency of the government, right? Assuming Qatar government said, hey, I will have my own cryptocurrency, a typical CBDC, right? It's basically ensuring that central banks are replacing their fiat currency with a digital currency. And this is under a lot of discussion. Almost all the countries today have taken up research. They have started doing this. And the advantage is this currency can be controlled. Your cash cannot be controlled. Your cash has its own challenges, and cash, unfortunately, is being used for terrorist and the negative aspects. So therefore, this is more effective, and you need not print this currency every time. The cost of printing and maintaining the currency is also an important thing, right? So therefore, this brings in that sort of a perspective. And then not to forget the latest trend today we speak of, the concept of metaverse, right? Everybody is in the metaverse. You know, Facebook has sort of renamed itself as Meta, right? We do not know how early or how late or, you know, how probabilistic this is, but we are actually hearing cases of people buying land in metaverse. I heard a case where, you know, somebody bought a land in metaverse, right? Somebody having a house built in metaverse, somebody having a profile and doing, you know, having a marriage in metaverse. That's a very interesting case. There was a marriage in metaverse. I was only wondering, everybody was to wear that, you know, the VR system and sort of look at the marriage and things how it is. But anyways, that's how things are, right? So this metaverse is given a different dimension or a perspective. It's given a different dimension and a perspective. And today, companies are using it for a strategic advantage. They're using it to market the product. Nike made close to about $10 million by just doing some of their franchisees on the metaverse space. $10 million is not a small sum of money, right? And they're just been digitally making their presence. Many of the companies are trying to be in the digital space and trying to see how well they're able to accelerate things. So that's another interesting space. Again, metaverse is not related to blockchain, but the concepts of blockchain are being used in metaverse in order to prove that you have the sole identity and other things, right? So these are a few simple examples which I spoke of, right? And then the list of cases are much more depending on each industry, each scenario. These are coming into picture. I think there are two perspectives in which we as professionals, as chartered accountants, we should be aware of blockchain. Perspective number one is for our own self, right? Maybe we have invested in crypto. What are the nuances, risks, advantages, disadvantages, all of this. That's one perspective. The more larger perspective, which according to me is what I call it as enterprise blockchain. Right? Enterprise blockchain or a private blockchain is basically a system or a setup where entities use that blockchain for solving a business problem. And that business problem could be a reconciliation. That business problem could be to eliminate mediators or intermediaries. That business problem could be to bring in an element of automation, and the list of use cases are huge. I think that is where we as professionals need to focus. And the moment we focus on those minute elements, let me tell you, this is where you realize what is the risk and what is the opportunities available. Right? The opportunities are huge because it actually brings in a whole setup in a digitized and a more trusty manner. But the flip side, if you ask me, is that it requires systems to get digitized. Only after that it can go into it. For example, land records. How will you figure out a land records in a blockchain-based system? Because you need to have a mechanism to convert a land record into a digital setup. A simple example, a unit of measurement of land, it could be hectare, acre, it could be square feet, whatever. You have to get that converted into a blockchain-based setup. And therefore, you have to feed who are all the original owners. So therefore, this becomes a one-time data input from which the blockchain setup starts working. Right? There could be disputes in land, there could be disputes, litigations. How do we tackle that? So those are all larger questions. But the bigger question is, do I have the data in digital format? And that today is actually happening thanks to the digitization initiatives, right? So that's one perspective as I think from an enterprise blockchain we should. And not to forget the interesting concepts which it also brings in, something like a smart contract. A smart contract, if you ask me, is like a exe file. When you double click, the file installs. Quite similar to that. It has a predefined rules, and each of the rule get activated at a particular instance. Say, for example, I've rendered services, and after 15 days, he has accepted. After 15 days, automatically the payment gets credited to my account, right? Or in the case of a Uber contract, which I made a mention, right? The moment I make a payment, it gets reduced from my wallet, it gets added to his wallet within no time, right? So these are all cases of smart contracts being developed, and it runs on the blockchain, therefore it is more trustworthy. And the last domain, what I'll also make a mention is interesting opportunities which may come up in blockchain, right? As professionals, we can probably do analysis of how blockchain works, right? We can do consultation service, whether a service or whether an entity requires blockchain or not. right? And by the way, those of you internal audit, COSO framework has been included or amended, or there's a guidance which is available how a blockchain and a COSO framework are integrated. So that's a good read for all of you. The World Economic Forum has got a lot of insights on blockchain. I think it makes sense for all of us to be aware of it. And most important is tomorrow, if your organization brings up any new trends on blockchain, I think you should be understanding the opportunities which it brings and the risk which it carries. Only then you can actually measure. One simple risk which I can probably bring it is linking the external world with the internal world in the blockchain, right? You have something called as off the chain and on the chain. Simple example, insurance contract. The moment insurance claim is or an accident is taken place, you obviously need to file a complaint with the police. The police department may not agree to be a part of the insurance company's blockchain. So you require a third party agent called as Oracle, right? Oracle, who, it's not Oracle is not a company, Oracle is an agent who sort of validates a transaction which happens in the real world and pushes him into the blockchain based world, right? Or a blockchain based setup. And these are areas where we as professionals have a lot of interesting opportunities, right? I think I have been given 15 odd minutes and I've made the best use of that to give you a overall umbrella perspective of what the entire concept of blockchain and where we are heading into. Of course, you have a very learned speaker immediately after me. He will be speaking more about use cases and his experience, and how in terms of he is actually, if I may probably be permitted to say, I knew him from the last couple of years, and I've seen how this gentleman who stuck on only to blockchain, right? As this thing, right? Of course, even at that point of time, I also was thinking whether should I go into it, but anyways, I had my own way of thought process of business, right? So he stuck on only to blockchain, and I'm seeing him fairly significantly grow. I think he will introduce himself. I think he's been among the LinkedIn top voices in terms of blockchain and a lot more things. So I think it's good that he is being part of this setup virtually and make the best use of his knowledge and your thought process. And I'm hoping all of you have a great learning and, more importantly, understand these technologies and start implementing in the days to come. Thank you so much for being a patient audience. Thank you so much for the opportunity.
So thank you, CA Narasimhan, for those insights into what blockchain is and what do we have in store in the future. Now let us move on to the most eagerly awaited session from one of the top 50 blockchain influencers in India. It is indeed a privilege for me to introduce him. Aishwarya Gupta is a chartered accountant and an executive alumni of IIM Calcutta. He is currently a senior manager at Polygon Technology and currently leads all fintech integration globally for them. He is also an educator and a founder of two edtechs, Blockchain Byte, which has curated courses for non-tech folks to learn about blockchain, and Battle Brains, which is a simulation environment where one can learn to use protocols built on blockchain. He is in the board of advisor for 12 projects which are bringing real-world use cases to blockchain. He's also currently working with multiple governments to come up with sandboxes for enhancing the use case for cases that can be run on blockchain. So, dear members, help me in welcoming CA Aishwarya Gupta onto the screen with a virtual round of applause. CA Aishwarya, the screen is all yours.
Thank you so much, Arun sir and Narasimhan sir, for the introduction. I would say you speak very highly about me. The point when we talk about blockchains, and I will just take a step back as well to make people understand. And just to take a perspective from everyone, I'll keep on asking questions. So the first question that everyone goes out and says, anyone out here who's actually working or seeing any blockchain adoptions in their particular organizations, just put in a yes for me. Got it. Okay. So that means we have a fairly new audience here. So I'll try to go and do justice and try to bring in a lot of accountancy here so that it all makes sense to understand. I would need sharing screen rights if possible. I can't share screen right now.
Yeah, just a second. I'll link you the co-host.
By the time this is given, I just want to talk about why. So one thing that while I was reading the book called Know Your Why, it stuck out. One thing stuck out to me, which was very prominent, and it said, hey, listen, while you're going out, and this is something which Apple goes out and does. If you go and study about Apple, if you go and talk about Apple, and there is a fair amount of comparison happening between Apple and Android, chances are that you would not be able to beat Android in the terms of specifications and a lot of things. And maybe Apple wins on a little bit lesser grounds. But still, Apple still holds like a very big brand value. And why they actually hold that is because they actually capture the why it should be sold out, why it should be, people should hold it. So they actually go out and clear out in a very easy sense why one should be doing that. So just to bring in the conversation of blockchains, why exactly something like a blockchain was required is something which is, let's say, the first question to be answered before actually going out and talking about blockchains. So now internet has been with us like for 4 decades. The internet has given us a lot of things like email, World Wide Web, social media, and everything like that. But after that, what happened was, and it has also helped us in reducing the cost of collaborations, cost of search, and it helps, like today, I'm sitting in India talking to people in a different country altogether. So that is how internet has a very, very well helped us. But is there something which is missing? Is there something which is required and which was missing in the internet? So yeah, there were 3 things. The first thing is, how do we establish the identity of someone whom we actually met online? Today, like we have 5 people right now who have their cameras on. How do I ensure that all the other people who are out there here are exactly what they pose as their name to be? Probably they're just getting some CPRs by just opening it with someone else. So that could be a use case which is out there. Now, so internet cannot help us today to go out and establish that who's actually behind the screen. So that's the first problem. The second problem is, how do we trust and transact without validation? So in 1992, there was someone called Nick Sabzo who wrote a white paper, which was called as the God Protocol. Now, what it actually went out and emphasized on was that we need intermediaries in between to actually go out and perform any business today on the internet. And these third parties, like for example, if I, let's say, want to go out and send $100 to someone from here in this particular meeting, you will have to go out and rely on maybe a bank, a fintech, or something like that, which is an intermediary without which you will not be able to actually move the money. So that is why Nick Sabzo termed these people as gods. If these gods do not exist, business on the internet cannot prevail. Now that was something through which it all initiated. But can internet without these intermediaries do this? The answer is no. So we need something which can eliminate these intermediaries to come in between and just do the transaction directly. So that was the second point. And the third point was, how do you, like today, if I talk about, so I talk to a lot of people across the globe in all the countries out there. And a lot of people like right now, they have this problem that they're not banked. They're not connected to the financial system. And while they're not connected to the financial system, 70% of these people still hold a mobile phone, which is a smartphone, and internet access is still there. Which means even when the banking is not there, 70% of these people are connected to the internet. So that is the third problem that we want to go out and solve. And because of this, there's something called blockchain that comes into the picture. Now, when we talk about blockchain, what is blockchain? Yeah, I think we fairly understood the definition about what is blockchain. But let's talk a little bit more and let me take you to an example which makes you understand how blockchain or what blockchains are and how they actually work. So assume, and I'm sure this time I'll get at least five yeses, is with you being at wherever position you are, have you ever gone out for a movie with your company colleagues? Have you gone out for a party with your company colleagues? Have you gone out for a dinner with your company colleagues? If the answer is yes, just put in a yes in the chat so that I know, yeah, these things are something that chartered accountants still do. Awesome. So yeah, the answer is yes. Now let's say you move on to a new company, and this new company, there's an outing that is being planned by the employees itself, and these employees go out and say, hey, let's go out and plan a movie night. And there are 5 of you people who are actually going for a movie night. Now, while you're going for a movie night, there will be someone who will book the tickets. You won't be booking it individually. Someone would be taking care of the food, someone might be taking care of the movement from one place to another and everything like that. So that way what happens is everyone takes care of all the expenses. At the end, you sum it up and you divide it by 5 and that's all the expenses. That's how usually you go out and do. But tell me something, while this whole process is going on, has it ever occurred in your mind, what if that exact expense that he has pulled out was not the actual expense? Let's say the cost of tickets was just 1,000 dirhams, but actually what he paid was 800 dirhams. So what happened here is that maybe because of some bank offers or XYZ things, that charge might not be true, but you would not go out and say that because that would just go out and just ruin the relationships among yourselves. So that is the kind of thing that sometimes would have happened in your life, maybe in your school life, maybe in your professional life or something like that. Yeah, I got a yes. So when you talk about these things, so how can I go out and solve this? So for this particular problem, what I can do is I can probably go out, take Google Gmail IDs of everyone, create a Google document, upload the screenshots of everything out there, and prove to everyone that this is how all these things were done. Now, this is where a centralized database came into the picture. When a centralized database came into the picture, what happens is, let's say it's a Google Cloud where you're storing all this data. First, the data that is being stored is on a centralized server. There might be some backups being taken and XYZ things, but there's one centralized place where the whole data is getting stored. Chances that someone from an outside, let's say there are hackers who are trying to breach into this database are more because there's one centralized database. Let's say there are 20 hackers, so they are just focusing on one database to breach it. Okay, so that is one problem. That being a centralized server, chances of your data getting corrupted, chances your data getting manipulated, and everything starts. The second thing is, because let's say it's held by a third party, which is Google, they won't probably go out and use that data, but can they go out and access it? The answer is yes. They can go out and access it, which means if this data was a company secret, it can be, or you can go out and you can take care of it, or you can take out that data without letting people know what saved that data. And this is something which has been done. And the last point is, while you're going out and using these services, the problem is they can go out and they can change the rules. You cannot question that, which means, let's say last year, AWS services went out and said, hey, this is the kind of Java services that you have to, this is the Java language you have to install or use in your whole coding if you want to continue using AWS services. Now, you have no other choice but actually go out and adhere to this particular thing. Because if you don't, you're kicked out of that system. And think of it as Ola, Uber, or any cab hailing services. Whatever charges that are being charged by the company itself, that can be changed, and there's no one who can go out and go against it. So these are the problems which in a centralized server or in a centralized management occur. Now, how do I go out, or how do blockchain come into the picture and they go out and add value or do something? So imagine something, I'll take the example of Bitcoin here because that was the first one out there. And that is the base of this particular presentation. So now when I compare this centralized server with a Bitcoin network, what happens here is, first, the data that is stored on a Bitcoin network is not at one centralized place. There's something called a node, and these nodes run the whole system. And currently across the world, there are somewhere around 15,400 nodes out there, which means the same data that is out there is stored at 15,000 locations. Now, when this data is stored at 15,000 locations, chances that you can corrupt this data goes to a very low or ultimately a negligible state. Why? Because in order for you to go out and corrupt this data, you will have to go and corrupt more than 51% of the total nodes which hold this data to make your corrupted data stay true. So hackers going out and attacking in the centralized server, one server, 20 people attacking, 15,000 servers, 20 people attacking. So you can very easily make out that this server is very more secure. The second thing is, even when you talk about putting anything on a block or putting any data on the blockchain, nothing or anything that you're putting out here is getting cryptographically secure, which means even from the inside, until unless I know certain traits, I will never be able to find out what exactly or who exactly did the transaction. And the last one is, while I have to go out and make a change, this change is not something which one central management can go out and make. You have to go out and convince 51% or more nodes again to go out and accept that this is something that they want to go out and change. So that is what the difference is between the traditional databases that we use today versus the databases that are now getting created using the blockchain technology. So with that, so what is a blockchain? A blockchain is, in simplest terms, a timestamp series. So all the data that you're putting out there, I can basically go out and show you live. Just give me 1 second. So all the data that right now is getting stored on the Ethereum chain, I don't have to go and get into a gated access. You can literally go out and see that what are the transactions that are happening. So all the transactions are stored in a block. So here you can see these are the blocks which are there, right? These are the blocks which are getting created. Then if you look at transactions, so this is basically a transaction. I'll just open up a transaction for you and show that to you. Just give me 1 second. Yeah. So here you can see this is a transaction that happened just 1 minute ago. This is the person who has sent it. This is the person who has received it. This is the fees that he has paid. This is the value he has transferred. So it's that open. You don't have to go out and enter into a particular network to go out and do it. It's all available on the internet. But the catch is, seeing this data, I cannot go out and make out who exactly is this person and who exactly is this person, which means though the data is public, but it is not completely open to the public. So that is how, like, a particular transaction, if you want to go out and track on a live version, you can actually go out and do that. Now, going back to, like, again, on the presentation which was there. So now so it's something which is timestamped. So you can see that this is the time at which the transaction has been done. It's immutable because of the reasons that I've already told you. Then it is managed by a cluster of computers for the Bitcoin. Like I told you, there were 15,000 nodes, not owned by a single entity, because for a decision making, you need 50% or more of the nodes to actually go out and consult or finalize a particular decision. So that is something which is there. And each of these blocks of data is secured and bound to each other using cryptographical principles. Now, if I go back and I try to explain it to you, how Bitcoin actually does it. So there's a very technical version, but there's a very easy version. I don't have a presentation for that, but I do have a content for that, which I usually cover up in some of my classes. But yeah. So this is something where I will ask questions and I want to see how much you're dedicated towards it. So that would be completely dependent upon how much energy I put. Okay, so that is something which is there. So let's say there are 4 people. Okay, very simple, very easy. There are 4 people. And what these 4 people do is that the name is Alexa, Bobby, Charles, and David. So there are 4 people. Now what happens is, let's say today, these 4 people actually go out and they actually are very good friends. So maybe sometimes David pays for, let's say Bobby pays for Charles or something like that. So this is the first thing where what you're doing is, let's say Alexa is paying Bobby $50 on behalf of Bobby. Charles is paying Alexa $40 or something like that. Now, while this is something which is there, they are maintaining this on a piece of paper. So anyone, if let's say goes out and does a transaction, so he just goes out and writes it on the register, hey, this person has done this transaction. Now, while you're doing it on a piece of paper, what exactly could be the problem? Just let's see if anyone can find out what exactly would be the problem if I just keep on writing and these 4 people are writing it up on a piece of paper. So there are certain issues that might come up. The first issue is basically it's on a piece of paper, which means anyone can actually go ahead and anyone can actually change this transaction. So here, let's say the first transaction was Charles pays Alexa, but it's on a piece of paper. What I can do is Charles can actually remove his name and put Bobby's name here. It's a public, it's an open notebook where he can just go out and modify. So that's the first problem. So let's say if this is the problem, what do I do? This paperwork will not work because it's not going to be true. We all know that there's one element in every group, in every company and everywhere who's going to malify or who's going to change these details. Okay, so that's the problem that came into picture. Now, when this problem comes into the picture, what do you do is how do you solve it? So let's say you go out and what you do is you start to go out and you put out handwritten signatures. So let's say when Alexa is going out and paying Bobby, Alexa goes out and signs it out. It goes out and signs it out and says, okay, this is something that I've done and this is my signature, which goes out and verifies. And now this is, let's say, being done on a digital ledger or a digital Excel sheet or something like that, where you're putting your digital signatures. Now with digital signatures, I guess everyone knows how a digital signature works because we sign digitally all our income tax returns across the world. And if there's any change that happens after you have submitted and signed, what will happen is the return gets rejected because there is a change that has been made, which was not authorized by you, correct? So simply put, what you do is you go to the table 3, where what you have done is you've put in your digital signatures. Digital signature means like when Alexa pays Bobby, he digitally signs a signature and says, okay, this is Alexa's digital signature, verifying that this is something that Alexa has done. Is everyone able to understand till here? Just put in a yes. Got it. Okay. So what happens here is, now be with me. The next problem that happens is, if I change something, then the digital signature will change. What if I go out and I duplicate this transaction? In duplication, basically what I mean is, I just, instead of one line Alexa paying Bobby, I go out and put it in 2 lines and say, okay, Alexa pays Bobby with the digital signature, copy paste. Now, will my digital signature actually change? Because I have not done anything. I have not modified anything. What I've done is I've just copy pasted the transaction again, which means I have not changed the transaction which says Alexa pays Bobby, but written that transaction twice, which is something called double spending. Will that make a change? Any answers if anyone wants to give? Will that change my digital signature? I'll come again. So let's say once you have done a particular transaction, there's a digital signature out there. And what I'm doing is a digital signature's output will change if I actually go out and if I actually do some modification. Here, I'm not modifying anything, but just copying the transaction and putting it again. The moment I go out and do it, the solution is you will not be able to go out and you will not be able to see any change in the digital signature, because what I've done is I've just replicated that. And this is because of this particular 2 reasons. We need intermediaries in between. We need banks. We need various other people to go out and manage our ledgers and everyone to ensure that no such thing happens. Now, when you talk about Bitcoin, why Bitcoin is something which becomes revolutionary and eliminates these intermediaries is something now what we come at next. So now what I do is, while I'm going ahead and while I'm changing this particular, or while I'm signing this, I put one certain element which no matter what I do will change even if I copy the transaction. What could that be? That could be the timestamp. Right now, if you sign something versus later on you go out and sign something else or copy that transaction again, what will happen is your timestamp will change. So what I did is, in this 4th step, I linked my digital signature to the timestamp. The moment I go out and connect my digital signature to the timestamp, what happens is, now if I try to copy it, the moment I go out and copy it, what will happen is I will have a different digital signature output. Why? Because one of the input, which is the timestamp, has been changed. So that is what happened next. Now I know what I have to do is, there were 4 people. Alexa was paying Bobby. Alexa was signing it. Every time someone was going out and copying it, there was a change in the timestamp and ultimately the digital signature output, whereby I could make out that this is a fake transaction and I could ignore it. Okay. Now, once that was done, another problem that comes up. What if today I do all those transactions for XYZ dollars, and at the end of the month, while I'm about to settle, let's say Alexa had to pay Bobby $200, and Bobby says, I don't have $200. The moment Bobby goes out and says, I don't have $200, what happens is there's no point of maintaining the system, because now Bobby does not have the money. And if Bobby does not have the money, then I cannot go out and I cannot do anything about it. So that is where what you did, what Bitcoin system came out and said, you could only go out and commit something which you already have. So here, if you're going out and saying there's $100 that so what I do is I deposit like $100. And now with this $100, what I can do is I can enable these 10 number of 10, 20 transactions till my $100 limit is not exhausted. And this way, I again don't need a bank to go out and help me out to ensure that I'm spending what my bank balance is and not something over. So again, I eliminated another element where bank was required. Okay. Now, once this is done, I told you that there were 15,000 people going out and maintaining this whole record. Now, are these 15,000 people able to go out, and are these 15,000 people able to talk to each other or tell each other, okay, these are the transactions that people are doing? The answer again becomes no. You cannot, all the 15,000 people cannot tell where or what all these transactions happening, and everyone is maintaining their own copy of data. So what I have done before this is I've eliminated bank. Why? Because what I've done is I've introduced a system through which all the transactions, if anyone modifies it, they will be notified. Another thing that I've done is I've removed the requirement of bank to maintain balances and ledger balances. Why? Because you cannot go out and you cannot transact till the point you do not have that much money. So I've eliminated these two things which a bank was doing for me. Now coming forward, because everyone has a copy of this data, because you're calling it distributed ledgers, so everyone has their own copy. Now, what do I do to ensure that all the copies are at the same point, or all these copies or all these blocks in which these data is being entered is all the data that is required, right? So what I do here is I basically go, and this is the basic problem with distributed ledgers. What is the biggest problem is that probably here what can happen is with Monica, the transactions could be Monica pays Chandler 50 LC, maybe any token. But with Chandler, the first transaction could be like Rachel pays Monica 50 LC. The moment this happens, what will happen is these two ledgers are not matching with each other. And whatever I did before has no sense to me anymore, because all these four people have different things, different copies and different thoughts which are put out, and they might or might not be true. So what do I do? So that is where something called mining comes into the picture. How many of you have heard the word of Bitcoin mining? Nobody has heard of Bitcoin mining? Yeah, so that is where basically Bitcoin mining comes into the picture. And I'll very quickly go out and tell you what mining is. So mining is a process in which you ensure that whoever has done the most work, that data copy is taken into consideration and put in as a block. So let's say, for example, here, there were 4 transactions in this one, 4, 4, 3, and 3. So what happens is this third one, he has not put in the most effort because he does not cover all the transactions. So that's gone. Now there are 3 ledgers left. In these 3 ledgers, what happens is I go out and check who was the first one to go out and write all these transactions. Well, if it was Chandler who wrote all these transactions together the fastest, what happens is I assume that Chandler's copy is true and I move forward with that data. So that way, what I do is I remove that issue of distributed ledgers. So that is basically how what I've done is I've eliminated all the intermediaries in between. And while eliminating all these intermediaries in between, I have ensured that the data and the content and everything that I'm doing right now without an intermediary, I'm very well able to go out and do that. So that is something like how the whole infrastructure of blockchain works in that sense. So I've just explained you what blockchain is properly. Then a question comes in is, is blockchain and Bitcoin the same? Because I just gave you the whole reference of Bitcoin, blockchain, Bitcoin ecosystem and everything. How many of you think that both the things are same? And it's completely fine. Others? Correct. Yeah, they're not. So what blockchain or Bitcoin? So Bitcoin is something which was the first use case which came into the picture of distributed ledgers. It was not termed as blockchain. There was nothing in that whole paper which termed the word blockchain. It was chain of blocks, which later on came into the picture and was set as blockchain. So blockchain never existed before Bitcoin. Bitcoin came first, and then the word blockchain was coined over it. Now, I took out the snapshot of the first block, and all you can see here is all these decimals, alphanumeric characters and everything. But one thing to tell you, like this was the first block, is because the first block or the first transaction that ever happened was on the 3rd of January 2009. And this is something which is embedded in the block. So you can see 3rd January 2009. And why? So what it has done is the Times headline, which was there, the chancellor is on the brink of a second bailout. So this like goes out and just tells you that, okay, this was the first block. Now, this was something which was created by an anonymous guy known as Satoshi Nakamoto. We do not know who that person is. We have no idea who actually created it. A lot of theses are going around, but there is no name that actually comes out of the picture. Now, while saying that, the first transaction that ever happened on the blockchain network was something where actually a value was transacted, which means I paid, instead of my fiat money, I went out and I paid Bitcoin for a purchase, was in 2009 itself, where someone just said, I'll go out and pay 10,000 Bitcoins for if someone goes out and delivers pizza to my place. There were actually 4 people who actually went out and gave that. And to your surprise, 40,000 Bitcoins were paid for 4 pizzas. And after that, like that was the first transaction that ever happened. And while after this, basically, this is where the whole picture came into the thing. A lot of discussion came into place, and everyone was like, okay, this is how it works. Okay, this is what the whole technology is all about. Now, while we move forward and we talk about, I think, Bitcoin, a lot of people actually go out and term it or compare it with gold. A very quick question. Do you think gold was chosen because gold is gold? Or gold was chosen as a store of value because there was no other choice? I mean, a wrong answer could be okay, but please. Okay, no other choice. Anyone else? No other choice. So yeah, the correct answer basically is there was no other choice. What happened is, I'll just quickly explain it in a minute, is when we talk about the whole periodic table, and that's basically on my table right now. When you talk about this whole periodic table, first, gases, you cannot use it as a medium of exchange. So you rule out all the gases. Reactive metals, you cannot go out and use. Why? Because how will you go out and actually use a reactive metal as a medium of exchange? It will react. Cannot do that. So that is another. And then there are elements which are very corrosive to nature. You put it out in the sun and they corrode. So you cannot have something whose value gets corroded very easily. So what happens is, this way you go out and eliminate 36 elements. Then what happens is, there are elements which are super rare, which is so rare that they might be only available in a meteorite. I cannot go out and I cannot use that. There's no way I can go out and use it as a medium of exchange. Okay. So that again rules out some of the very rare materials. Then there's another one which goes out and says, which is abundantly available in the nature. Like, for example, copper. If copper is so abundantly available, you cannot have it as a store of value because it's so easily available for everyone. So you rule out that. What is left is basically, this also again rules out like 26 more elements. And then what you are left with is 5 elements. Is rhodium, palladium, platinum, silver, and gold. Now, rhodium and palladium were not discovered till late 1980s, which means gold was in somewhere around 1400 or 400 BC, I'm not sure. But at that point of time, that was not there. Then the next thing is platinum was something whose melting point was so high that till late 1990s, they were not able to go out and melt it. So platinum was also out of the picture. What is left is gold and silver. Now, if you put silver outside under the sun, it will tarnish and turn black by midnight. So silver tarnishes very badly, and what is left is gold. So gold was taken out because there was no other choice left in the whole periodic table. The periodic table just finished out. So that is something which is there, and gold has some of its value derivation because it's scarce in nature. You cannot find it everywhere. It's durable in nature. It's portable. You can carry it from one place to another. You can break it out. It's divisible. It's fungible. And also, like, it's hard to counterfeit. You can counterfeit it, but it's hard to counterfeit. And it's easy to authenticate. There are very simple ways in which you can authenticate whether it's an original gold or not. Now, that's why gold came into the picture. Now, when we talk about, let's say, Elon Musk today talks about space, going to the space, talking about spaces and everything. Now, when that happens, the problem that comes into the picture is, first of all, gold is scarce, but you can always find more gold somewhere hidden around. Gold is durable, absolutely. Gold is portable and divisible, absolutely. But if I compare it with Bitcoin now, when I talk about scarce, it is limited in nature, but you can find new reserves. Bitcoin, to its originality, is 21 million tokens. Second, portable and divisible. Portable and divisible, you cannot go out and buy a chocolate with gold. I can guarantee you that. But with Bitcoin, you can actually go out and break it into a millionth piece and go out and pay for a chocolate. Okay, it's very easy to go out and send. Today, if I want to send gold to, let's say, a person who is stranded at XYZ place without any actual ways to go out and transport, it's very difficult. On the other hand, if I want to go out and transfer Bitcoin from my place to you, I can just do it right away in 2 seconds. So that's how quick it is. I can, like, after this, I'll show you one transaction as well, and to show you how quick it is. Okay, so that is something which is there. That is basically a talk what Bitcoin versus gold comes out. Everyone has their own ways. This is one thing that gold cannot do, or Bitcoin cannot do, which the gold can do, is you cannot wear Bitcoin maybe in your neck. So that is something which is there. And when we talk about this whole thing about Bitcoin, let's move on to something which is a little bit more in depth when we talk about it. So one thing that comes out with blockchain is, if blockchain is just this thing, this Bitcoin and everything like that, why everyone is talking about blockchain? Why everyone is trying to implement it? Why every fintech around in the world is actually trying to adopt all these situations or all these solutions out there? So there's much more. There's something called smart contracts. Now, when you talk about smart contracts, what happens is, smart contract is nothing but an else statement. What I'll go is, I'll again go out and give you an example. Let's assume I want to go out and I want to pay Ankit, let's say $1,200. Now, when I want to go out and pay $1,200 to Ankit, I don't want to go out and pay it upfront $1,200. What I want to do is I want to pay $100 every month for the next 12 months. Now, if I want to go out and use the banking channel, what will happen is, in the banking channel, first I'll have to open a bank account. I'll have to give the bank account number of Ankit. Then I have to go out and give a standing order. Then probably if it is not 1,200, it's $1.2 million. I'll hire a lawyer to ensure that everything is in place so that I don't get into any penalties and everything like that. And maybe I also have an escrow account created where the money is lying so that I'm not able to withdraw it because I've already committed it to Ankit. Now, after doing all these things, is there anyone in this room who can actually go out and confirm me that these transactions over the next 12 months are going to happen for sure, and there will be no issue? Just put in a yes if you feel that's something that is, and there will be no issues. Nobody can do that. So that's what I want to point out. When you talk about blockchain in a smart contract, what I can basically do is, now, what is a smart contract? I'll again explain it to you in a simple manner. But what I do is, in a smart contract, I just built in an if-else statement, which says, if today is the first of the month, I have to go out and process this payment to this particular address. And that's it. I put in $1,200 in the contract. In that contract, I specify the condition, which is every first of every month, I have to go out and send $100 to Ankit's wallet address. Once this is done and deployed on the blockchain, you already know what blockchain, all the features of blockchains are. So that becomes immutable and everything like that. So once you've deployed that, you just forget everything. Every month, every transaction will happen for you. Why? Because blockchains are up 99.999% of the time, while your bank servers go for scheduled maintenance. So a lot of maintenance of that kind goes out and happens. So that is something where a smart contract is coming to the picture. A smart contract is actually taking ahead and going ahead and creating that kind of a work. And now to make you understand, even in a simple manner, or the first application of a smart contract, you can talk about vending machines. Anyone who does not know what is a vending machine, probably would have seen it at an airport or something like that. Now, when you talk about a vending machine, what happens is in a vending machine, it's just an if-else statement. Let's say there are 20 things displayed. What happens is the moment you click on something, there's an if-else statement goes out and runs at the back end. If this particular commodity is available, it will take you to the next step, which is how much quantity do you need? Again, let's say you enter 5, there are 3 quantities. It will go out and say, sorry, we don't have 5. What we have is 3. Do you want 3 or you want to cancel your transaction? You say, let's say I want to go for 3. It again proceeds and says, whatever the price of it is, go and submit this money. The moment you go out and submit the money, again, what will happen is the condition will check whether the money is equivalent or greater than the money that is required. If it is lesser, it will say insert more money or transaction decline. Otherwise, it will go out and give you the product. And if it is paid higher, you will get a refund, you will get the change back. So that is how basically this machine works out. And that is exactly the most simplest use case of a smart contract that could be. So, and what happens in a smart contract? So there are 4 things. First is it requires at least 2 or more people to go out and create a smart contract. I cannot play with a smart contract with myself. I can, but there's no logic. So that's the first thing. And it could go up to 1 million people. It does not care. Second is all these contracts are written written as a code. So why this is important and why this matters is because let's say there's the original contract between me and Ankit. We were going out and paying money. So while we are paying this amount of money, what happens is, let's say I said every month on the 1st, you will get $100. Let's say this deal was being done on the 15th of February. So maybe Ankit feels that for this particular month, first is gone. So for this month, my money is due. For me, I could think, hey, I have talked to Ankit and said 1st of every month, which means the 1st will start from the next month. So that way, what happens is there's a confusion. And while if it is a verbal contract, these confusions can later on turn out to be litigations. But here what happens is if you've written it on a contract, both have the same understanding because the contract does not create this kind of a confusion. Third is smart contracts are stored in a blockchain. I've already told you what a blockchain can do. And the fourth is these smart contracts are triggered when a particular condition is actually created up. So there are multiple use cases of smart contracts. There are retail payments, some commerces, parametric contracts, insurance industry, which is their algorithmic management, record storing, government voting, healthcare services, reconciliation, and automations. I don't have the time to go out and take care of everyone, otherwise I would have. But think about anything where you can just go out and put a condition to go out and complete that task. Your smart contract can basically go out and do that. So that's how wild your imagination can run and how wild your imagination can take you. Now, that being said, there are basically 3 categories which a lot of people are currently talking about. One is the CBDCs, another is the cryptocurrencies, and third is a virtual currency. Now, virtual currency is something which basically if you or maybe your kids play games, they're given out some virtual currencies and something like that. The second one is CBDCs, where the central governments are actually going out and trying to create a digital replication of the fiat money that they have. And the third one is cryptocurrencies, which is basically one of the use cases, Bitcoin. And then when it comes to one more slide, this is something which I also wanted to cover out here, is as a finance professional, what are your ways or where you can actually go out and contribute? So there's something like the first one, like you have equity research, mergers and acquisitions. The mergers and acquisitions have started in the blockchain industry. You can actually go out and become a M&A personnel in blockchain industry, where you understand the nuances of DeFi, how the DeFi works, what is these deals about, and everything like that. That's the one thing. The second is equity research, which can be equivalent to a public blockchain research. A lot of people are actually going ahead, and a lot of people are actually around the world. They're listing tokens, they're going out and doing due diligence in projects before investing and everything like that. So this could be like where you become a public blockchain researcher. Second is product development. So what is happening is a lot of people, like personally, I can go out and vouch for it because I'm working with almost every big fintech that you think of. And what that basic call, whatever the discussion that we have out there is, how do I implement blockchain out there? What is the product that I can just go out and build? Today morning only, I was just talking to a billionaire, and he runs like 10% of the global merchant chains across the world. And his just one question is, Ishwarya, how can I go ahead and implement blockchains and eradicate all these middlemen and go out and reduce the cost of transaction while using POS machines? So that's the kind of people coming in and are wanting to go out and implement these kinds of solutions out there. The third is blockchain consultant. So consulting basically where when you go out and whether blockchain is something which is relevant, which is not relevant, whether you should be implementing, because one thing which a lot of people think is blockchain is applicable to each and everything, which is an absolute wrong statement. There are certain use cases where blockchain works tremendously well, but on the other hand, there are a lot of use cases where blockchains have no use case and are just being used as a hype mechanism. So that is another one. Then the next one is basically crypto tax experts, where basically when you are going out and dealing with trading of cryptocurrencies and everything like that, what are the tax implications out there? So that's another one. Then you have node validators. So node validators is basically more of a business centric work, where a lot of public chains are going on some mechanism where you have to run a validator node. So what you can do is, if you can build out the necessary infrastructure, you don't have to go out and process anything. Just set up the infrastructure, and that infrastructure will actually go out and help you generate revenue while you process the transactions for that particular blockchain. And the last one is internship into research and development. So if there's someone who is just entering into this world, so I would say getting internship to learn real time how or where exactly these things work is something which is another thing out there. So like currently, right now, I'm hiring for research interns, which are out there to help me build some of the use cases that I want to present. So yeah, these kinds of things are something which are there. So I think that's pretty much it from my timeline also, and from the presentation itself. More than happy to go ahead and take any questions if anyone has them.
Devki, you can go ahead.
No, I think we'll
I
take
think
the
we have some questions, Ankit, in the chat box. So probably we can, I think,
Yeah,
sorry, can you address those? Yeah. Yes,
yeah, one of the questions from Shingaraju is, are smart contracts legally enforceable?
So smart contracts currently by any law in a particular government are not, but by code, the code is the law here. So if you are going out and putting out any conditions, so they are automatically by the code and by the law. But as a particular government, I think there are certain constituencies in US who have made this legal, but on a global basis, it's not.
Okay, another question that we have is, how are the margins will be kept confidential when buyer and seller both are party of the same contract?
The margins can be kept. So there are multiple solutions out there. The one solution that I showed you was a public chain where all the transactions are there. However, there are certain certain solutions out there, like such as Polygon Supernet, or Polygon Nightfall, which we are doing with Ernst & Young, where what you can do is you can send transactions without actually going out and revealing who those people are actually.
Okay, great. And another question that we have is, what is the difference between blockchain developer and consultant?
A blockchain developer would be the person who would be actually going into the technicalities to actually build out the whole solution. A consultant would come way before, where his task would be, if let's say a client comes in and says, I want to implement blockchain, whether that blockchain, so there's a whole mind map based on which you have to decide whether blockchain is something which is available or which is applicable or not.
Okay, another question that we have on the chat is, in fact, it's now 2. How many countries have legalized cryptocurrency and blockchain technologies?
Blockchain technology is not banned across the world. Everyone can go out and use that. Cryptocurrencies, on the other hand, are also not banned. There's a very big and a very thin line of difference. When you talk about cryptocurrencies as a medium of payment, which is your fiat currency, you cannot go out and use that, which is equivalent to gold. Today, if you want to go out and make a payment in gold, it's not legally enforceable. The person can deny. Similarly for Bitcoin, the person can deny, but in the fiat, they cannot, because that's legally, they are bound to go out and do that. So the status of gold versus the status of cryptocurrency currently is exactly the same, just that they both are not legal tenders and they should never be a legal tender.
Okay. And is there any code of conduct as regards regulating these new technology products?
And there are a lot of governments which are actually working on it. The top one would be the US government, which are coming out with the rules and regulations of it. I'm working with other governments as well to actually work on these kinds of laws and regulations which are coming out. But to answer in one word, like across the world, if there is any law which is already passed, it's not. Various countries are taking their own stances. So Russia recently took out its own stance to use cryptocurrencies. Similarly, like there are places where cryptocurrencies are being used as a legal tender as well. So it depends upon where or how or which country or constituency you're talking about.
And the last question that I have, or basically the second last question, don't you think that banks will be forced to implement blockchain to stay in the market?
A lot of banks are actually working under NDAs. Otherwise, I would have disclosed the names. But a lot of banks are actually working on blockchain solutions to create efficiencies already.
Okay, another question we have is there any mechanism like letter of credit with Bitcoin mode of payment where payment is done on fulfilling the condition?
The products exist. They're not like massively used because of the like not being aware of the product and everything like that. But yes, the product is available.
Does India have a sandbox environment to research and develop blockchain solutions?
For private blockchains, the answer is yes. For public blockchains, I'm trying very hard. Probably over the next 6 months, we see that.
And what is the basis for valuation of cryptocurrencies?
I mean, this is a way, again, the value for cryptocurrency depends upon various factors, which is like basically, if I put it in one word, is demand and supply. If on a particular, like, let's take the example of Ethereum. So when I talk about Ethereum, Ethereum is just like a supercomputer. Okay. Now, in order to run a supercomputer, or in order for you to go out, imagine, let's say Dubai, okay, Dubai or Qatar in 2006. There was nothing out there. There were, let's say, 1,000 people living out there. And for those 1,000 people, there were, let's say, 200 cars which were running, and there was one petrol pump. Now, in order for these cars to run, you need a petrol pump. There were 200 cars, one petrol pump was sufficient there. So this is exactly what, and then later on, let's say 2020, 22, there are 100,000 cars running out there. And that again is running on that fuel, which is being provided by petrol pumps. So when you talk about a comparison that the cars increased from 200 cars to 100,000 cars versus a petrol pump, which increased from one petrol pump to maybe 100 petrol pump. So now each petrol pump, which was earlier servicing 200 cars, is servicing 1,000 cars. So what happened here is basically this is exactly what Ethereum is. As more and more smart contracts are deployed on the Ethereum chain, you need to go out and provide a fee to run that chain, to run that smart contract, to run your project on it, which is payable in Ethereum token. So similarly, just talking about the Dubai model, as more and more cars are coming in, but the number of people or the number of gas stations or the number of petrol pumps are limited in number, ultimately what will happen is you will have to either increase the prices of petrol so that the demand reduces, otherwise, so this is exactly how Ethereum also works. The prices of Ethereum are increasing because the more and more deployment of applications are happening on it, and more, in order to process them, you have to pay it in its native token, which is Ether. So that is there. That being said, there are a lot of other things like the size of the market, how big, how exactly the problem is being solved, whether that problem is actually existing or it's a man-made problem. Then the last is like how much is the demand coming in, and whether the supply is appropriate or not. So all these multiple factors to go out and validate.
Okay, probably the second last now. How the cryptocurrencies are making profits and how we can link the profits to market capitalization?
So when we talk about, again, there are various segmentations when it comes to this. So again, working with Polygon, what I can say is, or a layer one blockchain which serves as an infrastructure to deploy smart contracts, the basic revenue comes from transactions. So the more the transactions on the blockchain, the more transaction fees one particular person is going to go out and pay. And the more the gas fees they're going to pay, the more the protocol will make revenue. So that is the revenue model for layer one solution. So today, if I say on an average, currently Polygon makes somewhere around $100,000 every day in fees currently. And if I talk about Ethereum, it's way more. It's somewhere in millions, because the gas fees or the price to do a transaction on Polygon is somewhere around, let's say, less than a cent. But while doing it the same on Ethereum, it costs you somewhere around $15 to $20 on an average.
So what was the reason for so much of fluctuation that we saw in cryptocurrencies in the recent past?
Okay. It's a good question, and I would answer it like in a very good manner as well. Tell me, like, if this makes sense. Imagine tomorrow, let's say India, where you have INR being prevalent and everyone transacts in INR. Let's say at 9 p.m. the Prime Minister comes in and says, let's go out and rule out INR and start using US dollars. What will happen to the price of US dollars? It will start to shoot up. Why? Because there's a demand coming in, right? So what happened is, like with cryptocurrency or with Bitcoin coming into the picture as first, there were a limited people who got a huge amount of quantity. That's the first reason. And the second reason is because the demand of this is ever increasing as well. So the prices are coming up. And while some of the wallets hold a huge amount of volume, they can actually go out and today they can actually make those movements in the market. So that's why these fluctuations will exist until a point of mass adoption is reached out, because there will be people who have initial higher supplies who are going to go out and dump into the market when the prices rise, thereby creating wider fluctuations. But ultimately, to a point where, let's say, 2 years down the line, everyone has adopted dollars in India, then that price fluctuation would not be that high.
Okay, one another question I'm not sure if you'll be able to, or maybe you'll be able to answer. If I have adopted Bitcoin as a currency along with Qatari Riyal in my financials, do I have to insert another column for reporting, and will it be accepted?
Currently, I think no, this would not be accepted because there are no such accounting bodies which have gone out and finalized such kind of accounting done there. If you are doing this like for accounting purposes, what you can do is you can basically take out the rates at the closing of the financial year to represent whatever you have in real terms.
Okay, now I think we have two futuristic questions. Can petroleum products be transacted in cryptocurrency in near future?
Absolutely. It's not like a very big deal. Give it a year, you'll have it.
Where do you see the value of Bitcoin in the next 6 months?
I have no idea. No, I literally neither trade. I'm not traded since past 1.5 years, at least till from the 1.5 year. And I never speculate on the value of transactions.
Anyways, that was on the lighter side. I just made it up. And now the final last question, which our chairman was asking for a long time. What does that wolf DAO mean on your t-shirt?
Oh, it's nothing. There was some DAO, and I love a lot of swags. So every time I go to a particular meetup and people are like, take these t-shirts and everything. So I have like a 200 t-shirts out there. So whatever I feel like wearing, that's there. Nothing like related to me or something like that.
Yeah, thank you, Aishwari, so much for answering those questions. It was a rapid fire, and I can tell you, we have never had so many questions in any of the sessions. That was quite heartening, which shows that the interest of our audience in the topic and how well they were able to relate to it. And really appreciate your taking the time out. With this, I'll pass on to our executive member, Devki Nandan, to deliver the vote of thanks. Over to you, Devki.
Thanks, Kamlesh. Dear members, I hope you all would have enjoyed today's session. It's my privilege and honor to give a vote of thanks to all those who have helped make this webinar a successful and memorable one. Our sincere thanks to the special guest of today's session, C.A. Narasimhan, for his word of wisdom and providing various aspects of blockchain, including opportunities and risks associated with it. Our heartfelt thanks to Speaker of the Day, C. Aishwarya Gupta, for an insightful session to take us through with various opportunities in blockchain and fintech, which are very emerging with every passing day. One thing I'd like to tell C. Aishwarya is, I think Kamlesh already mentioned it, which I'm going to repeat. The way you provided straight through answers of all the questions asked by our members is outstanding. And a big round of applause for this. Our sincere thanks to annual gold sponsor Aster Medical Center, annual silver sponsor Mauritian Qatar, annual support sponsor Creston SBP Chartered Accountants, and more for providing their support to carry out the chapter activities. I'd like to thank each member of Doha chapter of ICICI for providing their unconditional love towards executive committee. And I must say that you are our inspiration and motivation, without which we cannot do any either virtual or physical event. Finally, the entire executive committee of DCICI, led by our young, handsome, and dynamic leader, CA Ankit Agarwal, for their tireless efforts to make this webinar happen. Thanks once again. Stay safe, stay healthy. Good night to everyone.
Good night, everyone. Thank you.
Good night. Thank you.